The question says, what is the variable overhead expenditure variance for September? So expenditure variance will be the total cost, the total expenditure which is spent. The other details of the question are, Trafalgar budgets to produce 10,000 units of product D12, each requiring 45 minutes of labor. Labor is charged at 20 per labor hour and variable overhead at $15 per labor hour. So that is what is decided. Then during September, 11,000 units were produced, 8,000 hours of labor were paid at a total cost of 168,000, and variable overheads in September amounted to 132. So this is what they have spent. The total amount of variable overheads which they have spent is 132,000. So the question is asking us to find out what is the variable overhead expenditure variance for September. Expenditure variance. So right, variable overhead expenditure variance is equal to budgeted variable overhead variance minus actual variable expenditure. How much did they actually spend? The actual variable overhead spent is 132,000. That's the actual part of it. But then what about the budgeted amount? So what details do we have? How do we proceed further? Do we know what is the budgeted variable overhead expenditure? Do we know what is the budgeted variable overhead expenditure? Am I audible? Yeah.
Yes, ma'am.
Yeah. How much is budgeted variable overhead expenditure? What do you think is given in the question? See, there are certain details about how much time is required and how the workers are paid.
Ma'am,
The labor. Yeah.
I think it would be 10,000 units into 45 minutes per unit. Convert that into hours and then multiply that into variable overheads per labor hour.
Okay. Variable overheads rate is given $15 per hour. This 45 minutes is about the labor time, which is taken. Okay, so that is about the standards. The standards, each unit requiring 45 minutes of labor hour, and the labor is paid according to the time, the labor time. Fine. The labor rate is paid at the rate of $20 per hour. We are focusing on the variable overhead. So variable overhead is paid, is accounted at $15 per labor hour. So should we take that the number of labor hours as the budgeted or as at the actual? That is the point here. See, the identifiability of overheads is not there. So there is no identifying that with the number of units which are taken up, it would be charged. It is not according to that. So here, for the uniformity sake about it, we have to adjust the we have to calculate the number of hours depending on what is the actual number of hours which they have actually spent. They have used 8,000 hours of labor. So the variable overhead also, the budgeted variable overhead also should be accounted at 8,000 labor hours. So here it would be the total number of actual labor hours are 8,000 hours into $15 per labor hour minus the actual variable overhead expenditure is 132,000. So 12,000 is adverse. The next set of the next question from the exam kit is also the same set of data, but here it is asked for what is the efficiency variance. So let's differentiate between expenditure variance and efficiency variance. Can you help me out with the efficiency variance? Now this is labor efficiency variance. Efficiency is the usage. Usage is about the number of hours used. So the number of hours used will be at the budgeted or the standard rate per hour. The standard rate per hour, standard, or let's put it as budgeted. Tell me what are these details? So we need to know three variables. One is standard or budgeted hours. Then we need to know what are the actual hours. This time we are not adjusting. So whenever we do the labor efficiency variance, we do not adjust the rate according to the actual hours. So the rate part of it What is the rate? Standard hours are actual hours we know. What are actual hours? 8,000. What are the budgeted hours? Tell me what are the budgeted hours or standard hours?
7,500 hours.
7,500 is equal to they have decided the output to be as 10,000 units. Each unit taking 0.45 or sorry 45 minutes, 45 minutes out of 60 minutes. So put it that way, because that has to be calculated in terms of number of hours. 45 minutes divided by 60. So that is the time part of it. And so the difference would be so is it 10,000 adverse labor efficiency variance.
Ma'am,
Mhm.
ma'am, actually, I have a doubt, ma'am.
Yeah.
Ma'am, actually, you have said about while calculating efficiency variance, we will adjust the hours for the standard hours. We will adjust according to the actual activity. But in this case, we took the 10,000 units. Why, ma'am?
Yes. I I'm sorry. I am really sorry. I'm sorry for that. I was also hesitant. What is the concept? Then in this case, this would be, as you have said, it should not be 10,000. It should be for the actual output. Output is not 10,000 but 11,000. I'm really sorry about that. So how much would this come out to be as? 8,250. I'm really sorry. So this is 5,000 favorable, not adverse.
Then I have a question.
Yeah, yeah. Yes,
If
yes.
then for expenditure variance, shouldn't we have taken the budgeted because they only expected that much expenditure? Because
Expenditure,
or do we always take the actuals?
which part of it you are asking? The
Ma'am,
first part or second
for
part? First.
expenditure, it's like the concept is we make a plan
Mhm.
and then we make a plan for something and then the actual thing happens. Whatever is the variance, ma'am. But we have taken it, what do you say, as per the number
No,
of hours.
that part of it is what you have mentioned is also correct. That whatever is planned, and then compared with the actual. But that can happen only in case of fixed overheads because they are not proportionately varying with the output. Therefore, we take that fixed budget and compare it with the actual budget. So that also becomes a part of the planning variance. So at the time of planning, they have anticipated only this much would be incurred but something else has incurred. So this is applicable only in case of fixed overhead budget variances. Fixed overhead variances we take, but variable varies proportionately with that. So the output part of it now the variable is the very definition of variable, it varies proportionately with the output. So in that case, what are we supposed to do is we take the variable budgeted variable overhead rate, apply it for the actual output. So when the output itself is different, so we are applying it at that rate. What you have said also is tested, but that will be because fixed cost doesn't change proportionately. So there, whatever is planned compared with whatever actually happened. So that is also there. That becomes a part of the fixed overhead variance, not with variable.
Okay, thank you.
Let's take up the next set of questions. The next set of questions are for sales variances. We will first work out some more um, cost variance questions and then we'll go back to the sales variance. So because some more questions are given for cost variances. So let's work out those things and then we'll come back to the sales part of it. Since we have not started working out on the sales variances, so we'll first do that and then come back to the sales variance. So from this we see that the next question would be for 63. I'm taking 63 and we'll put this one the Excel file. Sixty-three talks about ideal time variance. Ideal time variance is a simple concept. Take the number of hours of idle time, multiply it into the budgeted budgeted rate per labor hour. So how many ever hours are unproductive, that becomes the idle time. So there is no production during that. But then because the workers are still present in the premises, their wages would include for this idle time also. So in any situation, idle time is always an adverse variance. So first we need to find out what are the number of hours of idle time, multiply into the budgeted rate per hour. QPLC uses standard costing. The details for April were as follows. Budgeted output is 15,000 units. Budgeted labor hours are 60,000 hours. Cost is 540,000. Actual output is 14,650. Actual labor hours paid is 61,500. Productive labor hours is 56,000. Actual labor cost is 522,750. So let's start. So the actual output is 14,650. Actual hours paid is 61,500, but the productive hours are only 56,000. So how much is the idle time? So first check that idle time is equal to 61,500, for which they are paid, minus 56,000. So that comes out to be as 5,500 hours. Budgeted rate, budgeted rate per hour is equal to the cost is 540,000 and the number of hours is 60,000. So how much would the rate be? It would be 6 9 54. So 540,000 divided by 60,000. 9. Find out the idle time variance. Idle time variance is equal to So the next set of questions are given us from 69 we see. One is expenditure variance, another one is favorable variable overhead variance, overhead efficiency variance, then the total variance per supervisor's cost. So let's take these three questions. Question number 69. Expenditure variance is equal to Annabelle uses activity-based costing to allocate its overheads. The standard cost expected for the setup cost pools were budgeted units are given 22,000. Budgeted setups are given as 220. Budgeted cost is 6,820. Actual cost incurred given are actual units are 21,000. Actual setups are 200. Actual cost is 6,300. Expenditure variance is the difference between what is the budgeted and the actual budgeted cost, budgeted expenditure minus the actual expenditure. So that is what is the expenditure variance. The actual expenditure we know the actual expenditure, the actual cost is mentioned as 6,300. Budgeted cost is also given as 6,820. But what are we supposed to do? We have to make the adjustment of the expenditure as per the actual output. So that is the one adjustment which we have to make. So budgeted expenditure for the actual output minus the actual expenditure. We know what is actual expenditure, which is 6,300. Let's come to budgeted expenditure. See, budgeted expenditure we would have calculated simply if the rate was given. Do we see the rate given? It is only the fixed budgeted cost which is given as 6,820. But how much would be the cost according to the actual output is what we have to look into. How do we do? Any clue? Any? The actual output is how much?
100 setups.
Ma'am, the budgeted cost divided by budgeted units into the actual units.
Okay.
Ma'am,
Mhm.
but the expenditure variance is for the number of setups. Why would we look at units? The question asks for setups.
No, setup. I didn't approve that. So
Oh, okay.
this is for setup. I didn't start writing. Agree that. Very good. Very good observation. See here it. We. I mean, whatever the other student, whoever has answered, absolutely you're correct. But the question is not is also mixing activity-based costing into this one. So what you have answered exactly correct. If there was nothing related to the activities, so therefore the same concept you apply, but instead of taking as the number of units, consider the setups. So first we need to find out what is the rate per setup because they are using ABC for the allocation of overheads. We have also done one question this at the beginning of this class about the um, expenditure variance. The first question which we have done. So we have adjusted the expenditure according to the output. So here also we would have done if it was a simple question, but then this is using of ABC and their method of absorbing the overheads is by way of setups. So just instead of number of units, replace it with the setups. That's it. So budgeted expenditure, take it as 100 adverse because the actual expenditure is more than the budgeted expenditure. Question number 70. A company produces two products with the following standard information. The details about the product X and product Y are given. Production and sales are 10,000 units and 18,000 units. Direct labor is also mentioned. That is at the rate of $7 per hour. The cost is $14 and $10.5. Variable overheads are given at the rate of $3 and 2.25. The company actually spent 87,140 on variable overheads, while labor worked for 46,000 hours. 12,000 units of X and 16,000 units of Y were produced. The favorable variable overhead efficiency variance is, it's not just one product, but it is two products. So with two products we have to um, individually calculate that and then add them up, then that becomes the total variance. So it is not just that variances are calculated only for one product, one component, one type of raw material. There will be multiple things, so when we add them up it becomes the total variance. It is asking us to find out about, the question is asking us to find out about variable overhead efficiency variance. Variable overhead efficiency variance, efficiency here is measured in terms of how many number of hours were used, because the rates are given, the variable overhead rates, direct labor, um, which is calculated per unit, it comes out to be as $14, and then here it is 10.5. Okay, then certain other detail, that is the labor, I'm really sorry. Then variable overhead is $3 and $2.25. We are doing variable overhead efficiency. So first we need to find the difference between the standard hours minus the actual hours applied at the variable overhead rate. So let's write the variable overhead efficiency variance. Let's list out that. Somewhere I have written, I'll copy and paste it, but not able to find. So variable overhead. This is applicable at the difference in the budgeted number of hours minus the actual hours. The difference between the hours have to be taken into consideration. The total hours applied at the rate, the budgeted variable overhead rate per hour, because uh, calculating it for the number of hours. Do we have that information? The company actually spent 87,140 on variable overhead, while labor worked for 46,000 hours. 12,000 units of X and 16,000 units of Y were actually produced. So they have spent how many hours? The actual hours spent are 46,000. The actual hours spent are 46,000. Fine. The total number of actual hours spent are 46,000. But how many hours were spent by X? How many hours were spent by Y? How many hours would be spent by X and would be spent by Y according to the budgeted? So the actual hours are given to us. So actual hours is equal to the total actual hours spent are 46,000. We need to know what are the budgeted hours. For the calculation of budgeted hours, we need to first spend. How do we know how many hours were spent? The details given in the table under the budgeted, we have product X, product Y. The details are given per unit of product X. The total number of units produced are 10,000. Total number of units produced are 18,000. So that is what is there. Then after that, we see the direct labor cost per unit, which is $14 and 10.5. Variable overhead cost per unit is $3 and $2.5. So that is what is given. We need to know what is the budgeted hours totally taken, what is the budgeted variable overhead rate per hour. There are two things we have to know. The hint lies here. When the cost per unit is coming up to 14, this is calculated at $7 per hour. So how many hours were taken? So that's the clue. The total cost per unit is 14 and it is 10.5 here. But this was calculated when the rate calculated was at the rate of $7 per hour. So how many hours? How many hours would that be? 14 divided by 7. 14 divided by 7 gives us 2. Then here it would be 10.5 divided by 7. How much would that be?
1.5 hours, ma'am.
Okay. Okay. So how do we calculate the number of hours? This should not be taken at the budgeted output, but should be taken at the actual output, isn't it? The actual output for X is given as 12,000. Then for Y it is given as 16,000. This will be 2 hours per unit into the output is 12,000. Similarly, for the other one also, we do that. and the total number of budgeted hours are 48,000. The actual hours are 46,000, budgeted hours are 48,000. Budgeted variable overhead rate per hour. That is what we have to find out now. Budgeted variable overhead rate per hour. So for both of them, we got the variable overhead rate per hour as 1.5. Do you see this one here? The way we have calculated the number of hours, we got it as 2 and 1.5. And if the number of hours taken are 2 and 1.5, and if the cost comes out to be as 3, we find out what is the variable overhead rate per hour. The total cost of 3 adjusted for the or charged over or spread over 2 hours and 1.5 hours. So that comes up to be as variable overhead rate per hour is 1.5. So uniform rate is 1.5. Otherwise, we have to separate the budgeted hours for if it was separate. Let's say that if this was something else, if instead of 1.5, then we have to apply this formula separately for x, separately for y. Because this one is the same 1.5, we can take it as in one single step. We can finish it off. What if the rates were different? Then apply this formula separately for x, separately for y. So let's put this formula: variable overhead efficiency variable variance, variable overhead efficiency variance is equal to 1.5 in bracket, whichever is higher, 48,000. So is it a favorable or an adverse one? Do we see that this as a favorable or adverse?
Favorable, ma'am.
Favorable, because the actual hours which are taken are less than the budgeted hours. So which is equal to 1.5 in bracket into 71 says Alderholt uses activity-based costing to allocate its overheads. The following information is provided for the supervisor cost. Budgeted and actual. Total employees are given. Number of supervisors. Supervisor cost. What was the total variance for the supervisor cost. The total variance for the supervisor cost. Question number 71. So we need to find out what is the difference between the budgeted supervisor cost and the actual supervisor cost. Now this is an activity of supervising. There are costs given and the number of supervisors. Um, we have to spread that one for the over. See, the activity based costing always takes the usage of the activity. So the if the activity mentioned here, if it is supervisors, then the supervisor time is the basis of apportionment. The time which is spent to supervise whatever is the activity. The activity here, it is not in terms of the units, but it is in terms of the number of employees. So we have to spread this cost, take the usage of the activity cost, taking it away as number of employees. So let's write total variance for supervisor cost. 75 supervisors for 5,000 employees, and here it is 77 supervisors for 5,500 employees. Okay. So budgeted supervisor cost minus the activities are not uniform. The activities are, there are 75 supervisors under budget and the actual it is 77. The number of employees are also different. The number of employees are only 5,000 under budgeted, but actual 5,500. So for 5,000, if it was taken as 75, but the actual activity took place at 5,500. So how many number of supervisors would actually be required? That we have to consider. So proportionately now, or we are adjusting the budgeted cost for the actual output. So the actual usage will be for the total number of employees of 5,500. The activity is to supervise the number of employees. So the budgeted cost has to be adjusted according to the actual. So the logic will be, if 75 supervisors are there for 5,000, 5,500, how much? So 5,500 into 75 by 5,000. Number of supervisors. For 5,000 employees, we see it is 75. For 5,500, That would be how much? So, $82.5 supervisors are needed. And the cost of 82.5 supervisors. So, what is the cost? The budgeted cost is given as 7,500 for 75 supervisors. So, that part we have to also calculate budgeted cost per supervisor. Budgeted cost per supervisor is equal to, this will be $100. So how much will be budgeted supervisor cost for the actual employees? $100 into 82.5. Now find out the variance. The variance will be total variance for supervisor cost. $165 favorable. I think this week, the entire week, we have only 1 hour classes. I have another schedule starting now, so that batch will get over by this Friday. So after that, I will be free. We can have that regular 2 hours session from Monday. Okay, so we'll end the class here and meet again tomorrow. Tomorrow also we'll take up some more questions which are there. Maybe this week we will finish this one, and the next week we can start with budgeting. Okay, so